Hi, it's Stuart. Most Australians have the dream of owning their home outright one day. That is, repaying their home loan in full. So it's no surprise then that the internet is full of tips and ideas on how you can repay your home loan faster. The reality is there's really only a couple of things that you can do in order to achieve that goal. And most of the ideas are, sort of fringe ideas that might help you in a very small way, but won't make a big impact. So my recent podcast episode talked about, what are the 2 or 3 things that have the greatest impact. So the first one is that you have to minimize your cost of debt. And really that's interest rate, because fees aren't that material these days in terms of the fees that you pay banks. It's really about the interest rate. And research by the Reserve Bank of Australia shows that existing borrowers tend to pay a higher rate than new borrowers. So it's important that you shop around, and even better, get a good mortgage broker to shop around for you. And they'll be able to highlight when there's a better deal. Once they have that better deal, take it back to your existing bank. The broker can do that for you and see if they will reduce the interest rate on your mortgage, therefore avoiding the need to refinance. 9 times out of 10, the bank will come to the party and give you a lower interest rate. You really need to do this every 6 to 12 months just to make sure you're on top of the market, to make sure that the bank isn't charging you more than what they would offer a brand new borrower. Sometimes it's unavoidable. You've just got to play ball and refinance. And refinancing every 3 or 4, 5 years is sometimes just what needs to happen in order to get the lowest rate and the best mortgage structure. But don't be apathetic about it. Make sure you're really on top of it and making sure you're getting the lowest rate. The second way to repay your home loan faster is make sure you've got the right loan structure and then really direct as much cash flow as possible into repaying your home loan. So the right loan structure really involves having an offset account linked to your variable portion of your home loan. That means any savings or any income, as soon as it's deposited into your offset account, is saving you interest on your mortgage. And the less interest you need to pay, it means the more money you have to repay principal. In terms of directing as much cash flow towards the home loan as possible, look, no one likes budgeting. No one likes to, forego going out to dinner tonight and making those sorts of decisions. Look, you've got to enjoy the journey of building wealth. So it's important that you get to enjoy a bit of your income today, whilst also saving for tomorrow. And saving for tomorrow is really about repaying your home loan faster. So in order to do that, what you need to do is track discretionary expenditure at a total level. So every fortnight, how much you spent on discretionary items every month. And the best way to do that is separate discretionary and non-discretionary expenses into 2 separate accounts. And every fortnight or every month, transfer the same amount into your discretionary account and spend guilt-free. That way, you put a cap on how much you're spending on these discretionary items, and any money left over can go into the home loan. In fact, it will just accumulate in the offset account. It's also important to have a plan B. What happens in case cash flow isn't enough to be able to repay your home loan? And depending on your age and stage of life and debt levels, a plan B might be more important or less important. But plan Bs could be things like downsizing, a downsizing strategy, which is, sell your big family home one day and buy a smaller home, maybe when the kids have moved out. You've got to be careful about that because people tend to want to stay in the same area, and it doesn't necessarily mean they're going to downsize in purchase price as much as they might think. It could be borrowing to invest in property, for instance. So go buy an investment property, hang on to it for 10 to 20 years and then sell it one day and use that to repay the home loan. It could be invest in shares or even additional contributions into super. Park that cash flow into your super fund and take it out when you're 60 on a tax-free basis. Whatever it is, make sure you've got a bit of a plan B. And lastly, if you're self-employed, you can speak to your holistic accountant about what structures can you put in place to help you repay your home loan faster. So with some of our self-employed clients, there's structures that we can implement that dramatically increase their ability to repay their home loan. Not available to PAYG employees, but something self-employed people can consider. If you want to know more, check out the podcast episode on this topic. The link is in the video below, in the comments below. Until then, bye for now.